33.1%. Seriously, just let that number sink in for a second. It's not just some random stat. That is the massive, record-breaking adjusted operating margin from ASM International's first quarter of 2026. If you've been sitting there wondering exactly how profitable the physical hardware powering this whole AI boom actually is, well, there's your answer. It's a staggering achievement, and it instantly makes you wonder, what exactly is going on behind the scenes to drive that kind of profitability?
Welcome back to The Explainer. Today we're diving into something pretty fascinating. I mean, we hear about AI all the time, right? The software, the chatbots, those massive language models. But today, we're looking at the physical reality of that revolution. By breaking down the dense, complex Q1 2026 earnings of semiconductor equipment giant ASM International, we're going to reveal the true hardware constraints and the massive opportunities of the AI boom. We're cutting straight through the noise and getting right to the facts. So here's our roadmap for The Explainer today. First, we'll look at our record-breaking first quarter. Second, the AI demand engine. Third, cash flow and investor rewards. And finally, the Q2 and 2026 outlook.
All right, starting with Section 1, a record-breaking first quarter, smashing guidance and setting records.
The sheer velocity of this growth is just remarkable. ASM posted 863 million euros in revenue for Q1 2026. To put that in perspective, that's a 16% jump at constant currency compared to this time last year. And crucially, it hit the absolute top end of their own guidance range. But honestly, the margins are where the magic happens here. A stunning 53.3% gross margin, which is up from the previous quarter. And yep, there's that 33.1% adjusted operating margin we started with. How did they do it? Basically, a highly favorable mix of products and customers teamed up with some strictly disciplined cost management. They aren't just selling more stuff, they're making significantly more profit on every single thing they sell.
And this brilliantly illustrates why context is literally everything. Think about it. Despite all the global macro uncertainty going on right now, from the Middle East conflict to rising energy prices and worries about global GDP growth, ASMM just executed flawlessly on a micro level. They delivered absolute record margins. It really goes to show that when you're the one selling the essential picks and shovels for a massive technological gold rush, normal macroeconomic gravity just doesn't always pull you down in the same way.
Moving right along to Section 2, the AI demand engine, the why behind the numbers.
So let's kind of decode the physical anatomy of this AI boom. First up, we've got massive AI infrastructure expansion. Data centers are basically buying up everything they can get their hands on. Second, there's sustained strength in leading-edge logic and foundry nodes. And if we translate that into plain English, we're talking about the smartest, smallest, fastest processor chips on the planet. Third, there's actually been a solid rebound in mature nodes in China. These are older but still totally essential chips for your everyday electronics. And finally, advanced DRAM for HBM-related AI applications. HBM is high bandwidth memory. AI processors desperately need incredibly fast memory to work efficiently, and ASML provides the atomic-level deposition tools required to actually manufacture that memory.
Now, this quote from Hisham Assad, the CEO of ASM, is pretty much the defining thesis of the entire semiconductor industry right now. He says compute capacity is increasingly becoming the main constraint, driving accelerated investment in AI infrastructure. This absolutely proves that AI isn't just a bunch of software hype. The world literally does not have enough physical hardware to run the AI models that these tech giants want to build. The compute capacity itself is the bottleneck, and because it's the bottleneck, customers are urgently ordering ASM's manufacturing tools so they can build more factories.
Let's jump into Section 3, cash flow and investor rewards, translating margins into shareholder value.
When you look at their consolidated statement of profit or loss, you see they generated 459.9 million euros in gross profit, and that's just for a single 3-month period. When your operations are this highly specialized and this incredibly efficient, the cash just piles up fast. In fact, if we glance over at their balance sheet, this operational excellence meant ASM was holding an incredible 982 million euros in cash and cash equivalents by the end of March 2026. That is almost €1 billion just sitting there, totally ready to be deployed.
And they definitely are deploying that cash, specifically through a powerful dual engine of investor rewards. The management board authorized a brand new €150 million share buyback program for the 2026 to 2027 period. This is huge because it reduces the number of shares on the market, theoretically making each remaining share more valuable. Right alongside that, they approved an annual dividend of €3.25 per share. This is exactly the kind of thing you want to see when you're analyzing a company. You get the hypergrowth from a tech boom, but it's matched with mature, sustainable cash returns for long-term wealth creation. Best of both worlds, really.
Which brings us to Section 4, the Q2 and 2026 outlook, looking ahead at the supply chain. It turns out the sheer velocity of their growth trajectory is actually accelerating. ASML guided for Q2 revenue to surge to 980 million euros at constant currency, give or take 5%. That is a massive sequential leap. They're essentially telling the market right now that the demand engine we discussed a minute ago is picking up even more speed as the year goes on.
Looking at the rest of the year, the specific catalysts driving this are super striking. Management expects the second half of 2026 to be even stronger than the first. But what's really fascinating is their pilot line investments for 1.4 nanometer nodes, which start up in the second half of the year. That is an astonishing technological leap. When you combine that with continued year-on-year growth from China and healthy expected growth in memory sales, the blueprint for their 2026 expansion becomes crystal clear.
Which brings us to the ultimate question. We know the demand is there, we know the margins are absolutely phenomenal, and we know compute capacity is the great bottleneck of the modern tech world. But as the CEO warned in his own commentary, this massive surge in demand is putting increasing pressure on the entire supply chain. So can ASML actually build these incredibly complex machines fast enough to supply the foundries, who then have to build the chips to power the data centers that run the AI? The race is officially on, and the constraints of physical reality are pretty much the only things holding it back. I hope this structured look at the data gave you a whole new perspective on the AI revolution. Thanks for joining me on this explainer. Keep learning, and I'll get you next time.